Tell me why you think the transaction volumes have spiked so much in August. Is that some kind of post-summer bounce, stuff that was already booked in?
So if we look at seasonality, I was on the show previously and July was incredibly low, and we normally expect to see a peak in July. So it may just be that some of that normal cyclical stuff that we see really get pushed through to July has now just trickled over into August. But again, that makeup has a bit of an impact to it. When we break down those transactions, what's in there, it's not just the resale and ready market that's pushed it up that normally pushes July up. It's the off-plan market.
Okay, which is what's selling at the moment, according to your report. What does that tell us?
So it's a fundamental shift, right? When 2020, November, market bottomed out. Right. And then what drove the market recovery? It was ready property, so completed properties, villas and townhouses. That went on for a nice big boom, and then developers started to build again. And they start building, and then more developers come to the market, and we kind of go from this recovery phase to an expansion phase. So more developers bringing more inventory to the market, prices in the ready and resale market really getting to high points where people just aren't pulling the trigger anymore.
Not willing to pay it.
Not willing to pay it, or not willing to chase it as much before. So we're starting to see those prices plateau, with mortgage rates increasing as well, and what was driving as well was people taking a mortgage, so less people taking mortgages. Developers have brought to market this year just below 30,000 new units. 30,000 new units to market. It's a huge number, right? Most of that inventory has actually been in the apartment segment, which surprises me because that's not what drove the recovery. So is it really filling the gap where the market has?
Okay, a couple of questions off that then. One of the reasons that we did see prices rise so much during COVID in the ready market is because people wanted bigger properties to move into, right? They wanted a garden, you're working from home, the kids are homeschooling, whatever it is, you needed a bit more room. If off-plan sales are now what's peaking, what does that tell us about who is buying and why?
So I think what we've seen is both in the data and anecdotally is it's been investors buying, and it's been foreign investors buying. Not so much as larger population, the people that are expats that are here that need somewhere to move immediately.
Okay, which brings us to the mortgage question that you had brought up. Are we getting mortgages, or are these international investors who are coming in with cash?
The international investors are coming in primarily with cash, right? The mortgage market has still remained reasonably robust over long-term averages. Last month, it was up a little bit. This month, I think you're going to see it coming down a little bit. Last month, what happened is new purchase originations. So those for buying a property in that month, they fell about 9%. Refinance activity uptick and bulk mortgages upticked. So I think with more interest rate rises coming, that you're going to see further pressure on the mortgage market, that come down, which then puts less buyers with money in the market for resale and ready property, and could push some people that want somewhere to live to actually look in the off-plan market as well.
The off-plan market is attractive to many people because it operates slightly differently in terms of what you have to put down when you need to get a mortgage, when you need to start repaying. With interest rates rising, could that just be more attractive to people at the moment?
Yeah, I think it will become more attractive, but it's also changed. Developers in the downturn put more of an emphasis on post-handover payment plans, or larger percentages due upon completion. That's reverted now, where you've got a lot of developers requiring much higher, more than 50% during construction, say 20% down and then 50% during construction and a balance payment of 30%, with very few having post-handover options. I think what we'll see if the mortgage market continues to tighten, some developers bring back those post-handover payment plans to fill that void where a mortgage may not fit in.
Could we also be seeing people trying to get out of the rent rat race, as it were? And I say that because I've had a couple of conversations from people who didn't have the finances to buy into the ready-built market at the prices that we're seeing, but are having interesting conversations with landlords and thinking, if I'm going to be here 5-10 years, I'm going to have to own to afford this.
Yeah, look, there's going to be pressure on the rental market. Prices in a lot of areas, specifically villas and townhouses and key apartment communities, are probably going to have pressure on them, upwards pressure driving that up. So you will have some people that look to that option of, all right, let me buy somewhere. The thing is do they want to tie up the money now for somewhere they're going to have in 2 or 3 years' time, or are they seeking more that immediate gratification or reduction in the monthly costs? For most tenants, I think it'll equate to them staying put, having that battle with their landlord who's trying to get an increase and then just going, no. The maximum what you can do is the maximum that you can do.
You mentioned tying your money up. We've been talking this morning about the dollar strength against the rand, the pound, the euro. If people are looking to pay down debt and mortgages at home, what does that mean for the real estate market here and the amount of money available in it?
So this is one of the big things I think we need to watch, right? Dollar/dirham strength is going to have an impact on the market. When we saw a whole bunch of investors come into the market, both in the ready and off-plan market, they're bringing their cash in. That buying power has now been reduced, right? And it's probably going to continue to be reduced. So are we going to see that many foreign investors come in? And then on the resale and ready and even the expat market that's here, does it make sense to send money home right now where you're getting an extra 20% on your money over 2 weeks ago? I think there's a lot of people that are making that decision. Friends of mine are saying, look, they're sending back their whole paycheck, whatever they can, to take advantage of the currency rates right now. So those two things could start to slow down the market. And I'm not calling an end of a run. I'm just saying it's slowing down the market, which is actually what we want. I don't foresee any crash or big circumstance like that happening. It just might be another added pressure on the market that hopefully starts to pull things back, brings those rains in. We can't keep seeing record transaction months, 8, 9, 10,000 transactions a month. It's just not sustainable.
We've got 1 minute left with you. We touched on rents briefly there, but let's go back into it because you have mentioned yields in this report.
Yields on villas and townhouses month over month. I expect going forward, you'll see slightly better yield appreciation in villas and townhouses, more pressure on apartments coming down.
Jean Janke is the COO of Property Monitor, talking to us about the new Property Monitor report that will be out later today. He's given us a bit of a sneak peek. Strongest August on record when it comes to transaction volumes and prices starting to tick up for villas and townhouses for the first time in 3 months.